BYJU'S valuation has also been slashed by as much as 62%, Karthik. Another important story that we've been tracking in the edtech space. BYJU'S, whether it inflated its valuation, did not inflate its valuation, but what we know for certain right now is that there's been a massive loss in valuation, not just for BYJU'S, but for the likes of Swiggy and others as well. So a funding winter there, sort of dampening startup ecosystems fervor and their happiness and more to say their perspective for what's to come in this year.
Right. So to borrow a phrase that our dear friend Rakesh uses very often, linkages, right? I think it's important to look at the linkages here. Number one, specifically on the case of BYJU'S valuation had halved from 22 billion to about $11 billion in December last year. As of 31st December 2022, the valuation had already almost halved. And now it has taken the second jolt on its valuation, where the valuation has now come down to about $8.4 billion. So it has actually lost close to 2/3 of its valuation, which is a sizable number. But then look at the linkages here, and not just BYJU'S. Let's try to extrapolate that across all the other companies also that you mentioned and beyond that. Now what happens really is that you know that there is a funding winter. It is difficult for you to continue raising easy money. Right. This is one side of the story, that easy money, access to easy money has sharply reduced because investors find safer havens in investing, let's say, in the US Treasury bonds or in US government securities, etc. There is easier money because those were offering an assured yield and in a market that doesn't default and is unlikely to default again with the debt ceiling cleared, right? As opposed to continuing to invest in a risky asset class, which is startups, not just Indian startups, the world over.
Right.
So this is point number one. So now anytime you want to raise capital, you are unable to raise it at the same value or at a higher value than what you had estimated to grow at. As a result, you start offloading equity at a lower value. Now this devalues your firm per se. Now, on the other side of the curve, existing investors have seen that the roadmap that was laid out and the milestones that were installed have not been arrived at by these startups. Now, specifically in the case of BYJU'S, of course, it was a success story right in the midst of the pandemic when everybody was studying from home. And it became like a very obvious natural choice for a lot of people, a lot of students to enroll in BYJU'S programs. Now, as the pandemic eased, as schools opened up, obviously the whole business plan had to change, and that resulted in firing of employees and the whole mess that we saw in the edtech space, where BYJU'S, of course, leading from the front, but even the likes of Vedantu and all the others that had flourished, then all of them taking a beating. But now let's look at the other numbers. Let's look at, let's say, the likes of Swiggy, Ola, PharmEasy, Meesho. These are the others that have really been cut down in valuation, and they are down from 62% going down all the way to about 10% in valuation. This is simply, and in the case of Swiggy, it's counterintuitive because Swiggy's food delivery business has turned profitable, and its quick commerce is likely to turn profitable in the next couple of weeks, as per the company's own admission about 3 weeks, 4 weeks ago. So the point being that it is difficult to raise money with the same amount of ease and at the same high valuations that you were able to raise in 2021. That is now history. So all startups are beginning to realize that they were overvalued and they are possibly reaching their fair valuation at this point.
Right. Okay. Rakesh, for a lay person who's watching us out there, what do these revised valuation mean? Is this good news? Is this bad news? How are we to read into these numbers?
I think it's good news for the overall ecosystem in this country. It's bad news for these companies. Because, there's a certain sense of realism which is dawning on, the truth about these companies. I'm not blaming them for the way they raised their money and the valuations they got. So fundamentally, anyone who's studying economics or politics and the linkages, as Karthik mentioned, is that these valuations were like a bubble. And they were not based on sound business paradigms. And what has happened with most of the startups in this country, I'll come to specifics for Swiggy and BYJU'S, is that a great idea on paper, a great investor on paper he puts his neck out, and then there is a trajectory. We've been discussing this, that the investor feels that I have the numbers in terms of the volume game versus actual profitability in the P&L. That disconnect has sort of stymied India's startup ecosystem, and also this over enthusiasm to celebrate the unicorn status, again linked to valuation. So the fragility of valuation as a key metric that comes up front. So in that sense, I'm happy that we need many more entrepreneurs like the Swiggies and the BYJU'S, but they have to be founded on the fairness and the robustness of that idea, and most importantly on the robustness of the business model. So a lot of Me Tooism in edutech sector, Me Tooism happening in a lot of other startup ecosystem. Specifically BYJU'S, it did suffer on account of a major uprise when it came to the COVID, because it had a model which really worked well, and COVID, that model collapsed. But it's to be there are.
All right. It seems Rakesh is trying to find a good network to come back to. But I think from what I understand right now, and that the story around valuation and the way Rakesh broke it down is that even though it's good news for not so much for raising capital, it's good news. At least there's some realism that is kicking in. That unless you book some profit, these high valuation, these are just numbers. They don't make any sense.
I'm not sure if I agree 100%. See, it sounds logical. When you think about it sounds logical that, yeah, companies will make profits, their values will go up. But that happens mostly in the case of listed companies, where these numbers are really taken into account. In the case of startups and unlisted companies, it is actually what we seem to realize with, limited experience that all of us have, because startups is a new phenomenon. It's just about 20 years old per se. So what we've come to realize is that profitability has little to do with valuation. Scale has a lot more to do with valuation.
Okay.
So deeper penetration, more number of customers, and greater sort of, acceptance of an everyday transaction with a customer, that sort of adds more to valuation than profitability, because we've seen in the case of Swiggy, profitability is on the books, valuation has gone down. So I see this inverse relationship, though I don't think over multiple startups, over multiple years of data points, you will see this relationship to be inverse. But an immediate correction in valuation, if anything, should have been upwards instead of downwards, had it been linked directly to profitability. But what I see here is primarily a case of investors now saying that, okay, we've pumped in enough money, we have taken whatever returns that would have accrued to us by way of the startup we invested in, also getting another investor who has raised our value of investment because he invested at a higher valuation. So investors across the world have realized that, okay, we could milk it this much, we have milked it for now, let's take a step back. There is no hurry to continue investments. And just the other day, we did the other story of how foreign direct investments into startups has been dwindling, and how, the likes of Sequoia or Tiger Global or SoftBank have really cut down on their investments in the Indian startups right now. My feeling is they want to hedge it at the moment.
Okay.
There is likely to be an inflation. Global markets are not looking great. I mean, we see a flattish opening closing every day, but the scare, fear of recession, prolonged war, supply chains, all of that is going to continue for some time.
Right.
So they just want to hedge it. They don't want to go overweight on Indian startups. And anytime a startup wants to raise some money, that would be raised on account of a slightly undervalued valuation, as opposed to trying to milk the opportunity with a higher valuation.
All right.
So bad news for startup founders, definitely, no doubt. Good news for whom, yeah, I mean, it makes some sense, some logical sense in our minds and in the minds of public that, hey, how can a loss-making company like BYJU'S be valued at $22 billion? But hey, how can it still be valued at $8.4 billion? That is also a fairly high valuation.
Right. So some sense of realism there kicking in with respect to Indian startups. We will track that story.